guess. You never know. You might want to, I might say something you want to listen to again. It's possible. I don't know. Can't imagine what you think, but it's possible. We even can use a blackboard as well. We can even use a blackboard. Okay. Anyway, I will get your syllabus done before I see you again, and I will. Oh, who emailed me asking me? Yeah, you did. You're already checking answers and stuff? What are you working? Oh, good man. Yeah, I like that. No, so I sent an email to Carol and Martha, Thomas and Carol House, to get me access to the materials I need so that I can steal them and download them. I think the authors don't like to download stuff in Google. I'm supposed to know the answers, but you're not. I'm not supposed to give you the answer book, the solution manual. I'm probably not supposed to give you the PowerPoints either. Because then, I'd have them and you wouldn't, and we could protect academic integrity or whatever. Anyway, sure. So we were talking about types of risk. That's all, the further I got on page 6, wasn't it? But anyway, if you think about causes of information risk here, we'll just quickly go through. You're reading carefully. Are you underlining everything or highlighting, or are you making notes? Are you doing something to reinforce that you can actually remember this stuff other than just read it? Do so. Okay, discipline yourself to do that. I see some books with a lot of yellow stuff in it. I see books with nothing. I don't care. You have notes. Is that about this class? Yeah, good. All right. That's not what I said.
Probably not.
Yeah, probably. Okay. Anyway, but outline. You guys do whatever you need. Use the PowerPoints if you want. I don't care how you do this, but don't just read it. It's way too much to just read this stuff. You've got to really absorb it. And you know what my expectation levels are like, right? Everything's very good. Anything in any of these chapters, the entire book all the way through, you are going to be able to answer a question about, right? Okay, we all know where we're at on this. Okay, so just reminding you.
Yeah, how about the PowerPoints? Are they on Moodle?
They're not there yet. When I get the materials, probably today because I sent it to Martha and she'll do it. I'll get them out there either this afternoon or tomorrow. Okay, or this evening, I guess, or tomorrow. I'll put them out there. And so what I'll do is I'll put all the chapters PowerPoints out, and I'll put all the chapter solutions out. So you'll have them over the weekend. Okay.
So what's the times are they getting?
Yeah, there's nothing. Yeah. I guess our syllabus is there, right? Not it. And the wrong assignment schedule. Yeah, the one with the next weekend. And I'll probably do a couple of take-home exams. You guys care? Do I take home right here? No, particularly. No. Yeah. Okay. I'll just tell you limited time. Do an hour or something. So, okay. Yeah. Don't look anything up. Yeah. Okay. The usual rule. All right. Anyway, so what causes this information risk? Well, it's information. Remoteness of information. You know what really bothers me a bit? For some reason, we just have to do this. We think technology changes the world. I'll tell you what, you guys. I think it is an absolute miracle that when I do this, that happens. What do you think? How many of you truly understand how electricity gets here and you turn that on? I think that is just as amazing as the internet. I think it had just as big a difference made just as big a difference in our life, but maybe more. How about fire? I think fire made a tremendous difference in our lives. What do you think? How about the combustion engine? Do you really believe that the internet has more effect on human beings than the combustion engine? Really? I don't think so. The world changes all the time, and we just keep going. And this whole idea of, it's so much more complicated now than it used to be. Bull. There's more data, maybe less information because of computers. Right? What do I mean by that? Lots of data points. They're all out there. What if you don't know what to do with it? How to find the ones you want. So there's lots of stuff out there. In fact, more all the time. I mean, my YouTube videos are out there. Imagine if somebody ran across one of those. They're out there circling around on the internet, right? What a waste of time that is. And it is for them, right? Maybe not for you. Okay? Did I start that thing recording? You guys remember? I did. Yes, good. Anyway, yeah. But remoteness of information, yeah. If you're not in the same place with people. And, know what machines do it instead of people? That makes a big difference. Of course it does, right? Okay. Biases and motives of the provider is the biggest one, and it's always been there. You know, even some people will intentionally falsify financial information, right? Their financial statements. Other people do it because they're biased. That's why you need independent auditors, right? You're supposed to be independent. It's like you're a scientist. You really don't care what the outcome of the experience is, or the experiment is. You don't care what the outcome of the experiment is. You're testing a hypothesis. Are these financial statements fairly presenting the financial position of the company, results of operations and cash flows for the years then ended, or not? And it's not up to you to have some sort of a feeling of, gee, I hope they do. Now this is tough. The client is paying your fee. What happens if they're fraudulent? Well, you lose that client, you lose the fee, of course. So is there pressure on you? Might you be biased too if you're not careful? You know, well, yeah, I know them really well. I've worked with them for years. I know they wouldn't misstate their financial statements. You're not an auditor anymore. Got it? They talk about this stuff when you guys went into those firms a little bit, just a little bit. You know, in your real right? A lot. This professional skepticism is huge. What does that mean? I trust you or you would not be my client, right? If I knew you were a crook, I'm not going to audit you. You know, my job is to find everything you misstated to get it fixed so that you can have a clean opinion, an unqualified opinion. That's not what we do. I trust you. I think you're trying to do the very best job you can, but I have professional skepticism. You might be a crook. There are 4 people in the world that I could not audit, and there used to be just 2. The 2 are my 2 grandmas. Not my grandfathers. I know they lied. But my 2 grandmas never lied in their life. They would never swindle anybody. They would never take advantage of anybody. They both passed away, right? And they're clearly in heaven because they never did anything unethical ever, and they never would. So therefore, I can't audit them. In fact, I am not independent, right? Now it's my grandkids. They are absolutely perfect. They're smarter than all of you guys. Just ask me. They're certainly cuter than you guys. No doubt, right? No question. Okay? So I'm not independent, huh? They can do no wrong and never will. Right? I'm not parenting them. I'm their grandpa. Right? So, you know, got it? All of you guys. Hell, I can audit you. I don't trust you people. I do trust you, right? But I maintain professional skepticism. And that's where you need to be. Can you go golf with somebody, right? Not every week. Now you're friends. Oh, by the way, either get married first or just decide to be celibate all of your life before you go into public accounting, right? Now, it used to be you couldn't marry people that you worked with. You still can. You can marry them all right, but you know what? One of you will change jobs. You know why you'll change jobs? Because one will get promoted and one won't. And now they can't work for you. Your spouse can't work for you. Right? Also, don't date people you work with anyway. When they dump you, your feelings will be hurt. It'll screw up your work. You know, right? Yeah. So, yeah, our feelings get hurt when we get dumped. Yeah. So meet people now that are going to work for different firms. Now, do you guys know some people that are working for the same firm that are married to each other? It's horrible nepotism. They didn't used to do that. They used to fire you if you married somebody that worked at the same firm. I'm not kidding. Now they mostly just conventionally leave. Pretty much, right? Or one can work in tax and one in audit because they hate each other. You know, why would anybody marry an accountant? I don't know. So, oh well. So biases. Huge amounts of data, yes. The bigger it gets, maybe the worse it is. And then complex exchange transactions. That's true. People come up with new business transactions all the time. And so they get more and more complex. That's where we end up running so many companies together. Is because we understand what's going on. It's really nice. It's a good thing. Okay, for us. Anyway. Okay, so anyway. Anyway, let's see. Management, by the way, is taking more and more responsibilities for this, right? They're actually signing a letter that says representation, that says they're responsible for the financial statements. They always were. Oh, by the way, who owns the financial statements? Whose representation of the financial statements? Management. So then what's our representation? That's it. We're responsible for the opinion, they're responsible for the financial statements. We're auditing their representation. So it'll be a client representation letter that says that, basically. You guys seen one of those yet? I mean, it says we did nothing, doesn't it, pretty much. You're responsible for everything. And they sign. Yeah. Anyway, you told me everything you need to tell me. It's fair disclosure. And you're trying to get fair disclosure, right? You're really trying hard. You know what, if people try really hard to get fair disclosure, it's still really tough. There's so many estimates in there. Especially if they have a bias. Imagine. So can you see that there'd be a lot of information risk? Much less if they're trying to misstate the statements. Yeah, even a bigger problem, huh? Okay, or if they didn't misstate the statements. Okay, so anyway, we audit the historical statements, then we also do an audit of the internal control. This is relatively new, but it's mandatory to do the internal control. So I used to make students memorize the audit report. I don't do that anymore because the reports got much longer, and now there are two of them, right? One on internal control and one on the financial statements. Or you can joint one when we look at reporting. You get a joint one where you put the two of them together. You can do that if you want, okay? But in any event, it's still real long. It's still two reports. So that will have changed a little bit. Okay. I don't know why they put the Oscars in every single audit. Who cares? Okay, anyway. Review. The term review is real unfortunate. Top page 10. Term review is real unfortunate because it's used at least 3 times. What does review mean? Review of what? Did you guys have your work reviewed when you worked out there? Yeah, everything you do. It's weird, isn't it? But that's part of this. What is that part of? Tell me what reviewing. What is review? You guys tell me. Review. Somebody reviewing your work. They check it. They retest. They look at every single thing you did, right? You're brand new, so a senior typically, or maybe a experienced assistant, depending on how big the job is, will be looking at every single thing you do. They'll read every single word. They'll look at all your initials. They'll look at all your cross references. They'll look at all your indexing of schedules. They'll look at everything you did. And what is the purpose of that? Making sure you're competent, right? Which is helping to develop your competence too, which would then be training. They're training, right? Everything's all about training. As soon as you learn how to do something, you train somebody else to do it, right? So it's fine. You keep moving up, you keep training people that are below you doing that. Okay, so everything's reviewed. Okay, that's one thing. What else is it? Talk about in chapter 2 here. Quality control. Quality control in the firm, right? Everything is looked at. Remember, all you're giving your client are these 2 sheets of paper, right? And there's tons and tons of work behind that, right? The client never sees. They don't see the automobile you produced and drive it around, right? They see your audit opinion, that's it. Okay, that's what you're giving them. So it's really important for us to maintain really high quality control. Would that make sense? Right? You know, millions of dollars in audit fees. Everybody got the idea here? Okay, so it's for internal control, or control within the firm. Quality control within the firm is for training you, it's for supervising you, it's for providing evidence that you did supervise and that you did train, right guys? So there's a lot going on with this. So that's one kind of review. Use of the word. What's another one they're talking about here? Review of historical financial statements. What's that? Review for who?
Like a lower level audit.
It's, careful. Not audit. It's a lower level of assurance than an audit. Okay, there's attestation, and I attest to things. That's an audit fits an attestation. But there's overall assurance, right? Attestation is a subset of assurance, and reviews are part of that too. We'll have a schedule that shows that. Okay, reviews are part of that too. All those circles on there, right? We'll look at that. Okay, so a review is a lower level of assurance. It's more than a compilation, which is just putting the data together, called a compilation. A review is much less expensive than an audit. You collect no evidence. You read the financial statements, you have familiarity with the business, that kind of thing. Okay, and we'll talk about that later in another chapter. Okay, so that's one, and now that's for who? Who has to have audits? Any publicly traded company, right? SEC company. Who could have a review? Smaller. Might companies that are not publicly traded still have audits? Of course, they get audits. Okay, but they could have a lower level review. A publicly traded company cannot, because the stock exchange won't list the review. Okay, SEC won't allow it. Got the idea? All right, so that's one kind of a review. It's an annual review of the financial statements for issuing the financial statements. You give them a review report instead of an audit report, and that is what? Only for privately held companies. Okay? Got the idea? Very small companies. All right, then what? What's the other type of review? Oh, that's pretty good. I forgot that one. Peer reviews. You could have a peer review. Outsiders come in and do a peer review, absolutely, of an audit or any of your practice work. Yeah. Give me another one. Good. Okay. There's one beyond that one. That's kind of like a review of your work, but it's outsiders reviewing it, right? Okay. Outside review, peer review. Another CPA review, right? Or public company accounting oversight board reviewing it if you are a major CPA firm that is doing audits under Peekaboo, right? All right. So what's the other one? Quarterly reviews. What's that part of it? We do year-end audits on companies, but we also do quarterly. 10Ks, 10Qs. We talked about that last time, didn't we? Right? 10K is the annual financial statements. 10Q is the quarterly financial statements. As part of your year-end audit, you do quarterly reviews, right? As building up to that year-end audit. So that term is used a whole bunch. You might as well get it out of the way right away. And then there's other types of attestation services they talk about. Attesting to something, right? Examining, auditing, attesting to something. An attestation, which is, in my opinion, something is the case, right? I'll always say, in my opinion, I don't know. I did testing, right? I don't see the financial statements fairly present the financial position of the company, and so on. I say, in my opinion, they do. Got it? My opinion, just my opinion. Everybody thinks it's fact if we give that opinion, of course, but that's that expectations gap we talked about in 211, right? They think when we audit something, the statements are perfect. No, it's not. We hope they fairly present in all material respects, right? Yeah. Okay, and they give you some examples. So one thing that's kind of cool on the top of page 11 is green initiatives. Everybody getting really excited about whether or not companies are doing the right thing environmentally and so on, right thing in social conscience and all that stuff, treating their employees well. There are auditing opportunities in there, assurance opportunities that they really need. Right? On here, somewhere on here, oh, there it is, USDA organic profit opportunity. To say that, it has to be on. Does the USDA do the auditing? Minimal, they don't have any funding. Right? So opportunities. So don't think about it just as financial statements. And they give you a whole big long list here. Mystery shopping, bottom of page 11, you look at that. Organic ingredients, there it is. Fraud and illegal risk assessment, ISO 9000 certifications, right? So yeah, we audit all kinds of stuff. Or a test, you will test. All right, the figure 1.3 is the one I was talking about. Take a look at that. We have assurance and non-assurance, okay? So those are the two big ones. Assurance, we get either our opinion or a report, right? It's called negative assurance. A review report would be negative assurance. Instead of saying, in my opinion, the financial statements are great, I say, nothing came to my attention. Right? I read them, I talked to people, did a little bit of stuff, no collecting evidence. That's an audit. Right? Be real careful with that. So, and by the way, we're going to talk about this over and over and over and over and over. This is a real broad brush right now, okay? All right, so we'll get into it in depth. But this is really important. This is really important. Assurance versus non-assurance. You can see there's overlap on certain management consulting. It could go either way. But consulting usually is non-assurance. Tax is non-assurance. Tax is separate from audit. You wouldn't do the tax return and work on the audit at the same time. Okay? You do taxes and audit both if you're a small firm, but you wouldn't do both at the same time because you're auditing your own work if you did the tax return. Right? Same thing with management consulting. Arthur Anderson and other people got in a whole lot of trouble because they were installing all the computer systems, helping them buy the computer systems, making a lot of money off of consulting on systems, which just makes sense for a CPA firm, right? And then they were auditing those systems on whether or not they had good internal control. Are you kidding me? Really? And the profession fought not being able to do that anymore. Now they can't, huh? Sarbanes-Oxley did that fairly recently. Really? Because firms kept going back to it and back to it. You know why? Make a lot of money in consulting. People are really happy to pay you to help them make more money. They hate paying you to do an audit because they don't think there's no value to it. then we have this horrible habit of discounting the audits as a loss leader to get the consulting. Oh, disaster. So anyway, we'll talk about that as we go. Anyway, so under attestation, notice audits and reviews go there. Reviews, I think it should be on the line. It's really assurance, not attestation. I don't like that very well. It is assurance services, but it's not really attestation because you didn't give an opinion. But internal control, that's an opinion. Attestation for information technology, other types of services, sure. And then they have other assurance services down below. Where would you put a compilation of financial statements? That's non-assurance, okay? You just compile the statement. And we'll get into that in a later chapter. So anyway, the basic breakdown. And you can't do any attestation function, including reviews. You have to be independent for those, which means you can't have done any work for the client in terms of management consulting, that sort of thing, right? Your firm can do the tax return, but you can't. Does that make sense? You have to have firewalls. And your firm can do consulting for them, but you can't. The auditors can't. In large firms, there's even more than that. They really separate it. The joke now is kind of, there are 4 big 4 firms, right? So if you're a big company, one is your auditor, one is your tax accountant, one is your management consultant, and the other one is the next one to rotate in when one rotates out. Kind of true. Real competitive world? Maybe not, right? So, yeah, oligopoly. Okay, what's the difference between operational audit and compliance audit and financial statement audit? Financial statement kind of obvious. You're auditing financial statements in the notes, right? Talk about that. Compliance with what? Contracts, bond covenants, you name it. It could be compliance with rules and regulations, compliance with laws. Okay, so there could be all kinds of. So if they give an example, determine whether bank requirements for loan continuation have been met. Okay, so a compliance audit. What's an operational audit? A lot of times that's done by internal auditors. What's an operational audit? Yeah, actually, it's more future-oriented, and financial statements are more historically oriented, although the statements are used to predict the future cash flows, of course, right, about the company. But what do you think? On a compliant, or rather on an operational audit, you're looking at what? How good the operations are, which is future-oriented. What do we do to improve profitability? What went right? What went wrong? Okay, that kind of thing. How good are our systems? Could be done by internal auditors. You do not need to be a, do you have an Apple phone? Do you like it? He's reading messages. Yeah, but it buzzes. Mine buzzes and tells me that my phone has a message. It's low tech. Yeah, but anyway, it's pretty funny because then I ignore the message anyway. So figured I had it. And every once in a while it'll shake. Like you do. Anyway, I think it's my, nervous system dying or something. Yeah, something every time. Okay, anyway. So, in an operational audit, we think about 3 things. Efficiency, effectiveness, and the 2 of those combined together are economy. Did you do this in your systems class? Did you do systems yet? Those are the 3 E's, deal? Okay. Economy is really the other 2 put together. What's efficiency? Doing things as cheaply and as quickly as possible, right? Efficiency. What's effectiveness, of course? Doing a really good job. You want to maximize both of those. So a lot of operational auditing is after that. And a lot of internal auditors do that. The internal auditors can audit financial statements, but they can't give an opinion on them. You need external auditors for that. Internal auditors could do compliance audits. How about if you're working for the IRS? You do all 3 of these things, right? You could, but usually you do the tax return, but what if you're working for the GAO? They mentioned the GAO in here, don't they? What's GAO stand for? Yeah, Government Accountability Auditor. It's not office auditor. It's not governmental audit office, right? It will compensate. So watch for that, I guess. Anyway, they're the ones that find the $1 million toilet seats on the battleships. You know what I mean? Every time you hear about, Congress appropriated money and somebody stole it and, did all this strange stuff. That's these guys. It's kind of interesting, right? So they're the federal auditors. Then there are state auditors, there are local auditors. The salary continuously goes down. Federal to state to local. salaries for government workers don't make as much as, on average, as folks out in private, but they have great pensions and all that stuff. They're good. And this is really a kind of an interesting career. It's cool. Internal audit's a neat way to go too. You can work in public accounting for a while, and then you can switch to internal auditing, go to work for a company and be in internal auditing. Bad thing is you still travel a whole bunch because you go to all their locations, but it's really fun. It's kind of a fast track though to get into being a controller, moving up financial vice president and stuff, because you look at a whole bunch of the different operations. Not a bad way to go. Pretty good there. You guys know what a CPA is, though. Oh, you guys know what this XBRL thing is? Electronic data. Did you do that in your system class? Maybe see it someplace. You need to know what that is. What is this? It's a language, right? It's a business reporting language that everybody uses that files with the SEC. You file all your audit, or rather all your statements with them, right? And then what's the deal? You can access this data, and you can access it in a form that you can put into an Excel spreadsheet or a database or whatever you want to do with it, right? Okay, so it's public information, and it's available to the SEC and easily available to everybody else. It's really nice. You know, early in my career, we didn't have the internet, of course, right? Really old, okay? We didn't have the internet. So when you wanted to get a financial statement for a company, you had to either call them or write them and ask them to send one to you, right? How long does it take you to get a financial statement for, say, GE if we wanted one? Well, then, yes. What about now? Yeah, I don't know, 30 seconds, 20 seconds. How long do you put in GE? And, you know, I mean, it's up, it's running, right? Okay, so that's really improved, and this makes it even better. So it's a good thing to get done. Okay, your firm, were you using this stuff in your firm? Well, they're aware of it, probably. It's fine. Okay, all right. Oh, this fraud thing, yeah. During the economic downturn on page 14, during the economic downturn, you suppose there's a lot of work for auditors on fraud? Yeah. And when things are falling apart, people lie in their financial statements. They also steal. Things are falling apart. Okay, so when the economy's really strong, though, do they still misstate their financial statements? Yeah, because you're competing. So if your company's doing really well and yours isn't doing quite so well, is there pressure on you to show more earnings per share? Yeah. If a client is really close on their earnings per share, right, within a penny or two, high risk audit, probably. If they're way over, way under, and they're reporting it, well, maybe not so bad, right? But if they're real close, might they cheat a little to make their earnings per share? And you have a projection of earnings per share. You're going to make $2.02 per share this quarter, right? And it's $2.01. What are they really tempted to do? Find a way to make it $2.02 because the market will punish you if you come in below your expectation, right? You know, there's a lot of jobs in the line. We're making estimates anyway. You know, we can make it a little better, and we make it, and then we'll make it up next time, right? Everybody who embezzles money is going to pay it back when they start investing. But then they have to steal some more, and they have to steal some more, and have to steal some more, and they never get a chance to pay it back and get it real deep. Same thing with fraudulent financial statements. You make a misstatement to meet your quarterly earnings, what happens the next quarter? You need a little more. And the next quarter, a little more. And pretty soon, you're in wrong, right? Thanks. We're real confident somebody. You know what the IRS is? You work for them. Those are not bad jobs, especially auditors of the IRS. Talk about internal auditors. The requirement for becoming a CPA, right? You read about that. You know about that, right? Experience varies, of course. What's this year? This state? 1 year. It's only 1 year. A lot of states are 2. Doesn't matter. And then you have to have 150 hours. You guys all know that. And there's the different sections of the CPA exam. Great. Some states have a separate ethics exam, but what it usually is they send you a book, and as you read the book, you answer the questions. Right? That kind of thing online. And you read it online and answer the questions. So it's just to make sure you actually read about it. But ethics are pretty important, of course. You guys are going to be CPAs, I hope. Okay, let's get into the second section. On the first page, 25, page 25, this page chapter 2. Note, this idea of good auditing includes good client service. What is your relationship with your client? Are you a policeman? No. You don't work for the government. You're not a policeman. You're not their enemy. You're not out to catch them doing something wrong. You hope they didn't. You are unbiased. Are you on their side? Absolutely, I'm on their side. I want them to be profitable. I want them to do well. Will I compromise my integrity for that? Of course not. You know, it's as simple as that, guys. Right? So you maintain that professional skepticism. But do you provide really good client service? As in, are you upfront with them? Are you honest with them? Do you bill them an appropriate amount? Do you charge them only for hours and quarters? I hope so. You know, and you charge for your expenses. It's always kind of fun when you go out to dinner or lunch. You guys will be doing this with your clients. And, you know, if we pull out our credit card, you know, somebody from the client will say, you know, it's kind of silly for you to buy because you're just going to charge us anyway. We can either pay for it now or pay for it later. And you know what? That's the truth. Do you know how low your dues are for your accounting association? You know why they're almost nothing? Because those firms have plenty of money and they're welcome to come here and spend it on you guys, right? When they take you to do things. So we're in business, right? We're in business. We charge for everything. Okay? We charge for everything. But reasonable. And also you're on their side and you make that clear, but you also make it clear that you're independent, right? And so there's a little barrier in a way, but you're not an adversary. At first what will happen is, have you guys been any real small clients? It was the first time? The first time the client had the audit? Nobody got it. You did get to do that? They're afraid of you, aren't they? If they're small, did they
I guess
understand?
they weren't very small, but it was the first time audit.
First time audit. Were people uncomfortable when you coming in, or had they had somebody else before?
Not sure that that's
Yeah. But if it's a small outfit, you know, the accounting staff will think you're going to try to get them fired. Right? You're an auditor, right? You came there to find out they're not doing anything, and you're going to get them fired. One thing I'd always do on particularly small clients, but even larger ones, I'd ask for a copy of every single report they did. Not real big ones. I'd get a copy of every report they did. And then I'd see how many of them had exactly the same information. And I'd recommend that they get rid of the reports that had the same information in it and share reports. I'm not kidding. I'd find out if anybody actually used the reports. Right? Nobody uses them. Why would you prepare them? Everybody has more work than they can possibly get done. They're working overtime, they're stressed, they're going crazy, and they're duplicating effort. In every organization I've ever seen in my life, it's been that way, including this one, big time here. Right? People doing stuff over and over and over again. Different people doing the same thing. I kind of try never to be on a committee because we have committees do work, have a report, and then the next year you could be on the committee again and do the same work and have another report if you want. Not kidding, right? Waste, just total waste. So, but you know what's funny about that is you start saying we should get rid of these reports and people think you want them to get fired. No. I want you to do stuff we're not doing that would generate more profitability for the client, right? For the company. That's how you generate value, you guys. Here are things we can do to make your life easier and make the company more profitable. Everybody wins. When I was working at Dwyer, Perry & Colson, a small CPA firm, they got mad at me when I started teaching, the partners did when I started teaching their clients how to do quarterly reports, payroll reports, you know, and excise tax returns. You guys have done those in your sales tax returns. You guys have done those in your internships probably, right? You're doing all these basic reports. Dwyer, Perry & Colson actually had an accounting staff doing that stuff. And I went on these jobs when I was first there, and they thought I was going to do it. I never did one. I found somebody who was really sharp with the client. I taught him how to do it, and the client started doing it. And the partners were mad because we weren't going to be able to bill anymore. The client was thrilled, of course. And they started asking me questions about how they should run their business. Because I knew how to reduce costs, didn't I? I reduced ours. And their employees were happy because they were trained to do something that wasn't quite so menial, right? So their bookkeepers, their clerks started doing this work that I didn't want to do. I think what you should do is train somebody else to do everything you know how to do and learn how to do something else. What do you say? Wouldn't that be a cool career progression? To do it with your clients, too. It'll make them really, really happy. You can't have them do the auditing, okay? I've seen auditors try to do that, too. They are not good, right? and they prepare PBCs for you. What's a PBC? Prepared by client schedule. We used to put a little red PBC on it. The computer now puts something on it. Is it still red? That's hilarious. Accountants can't change anything. Auditors. What's the difference between an auditor and an accountant? An accountant is preparing financial information. An auditor is auditing. Same person, maybe, right? With different functions. You know that too. You know, once you know that. They said it in the book. Auditing versus. All right, anyway, yeah. So what's a PBC the client prepared? So is that a violation of independence? No, if they didn't collect any evidence, if they're just providing you with data, it's not. So they can do schedules for you, but then you audit the schedule. By the way, what if you prepared the schedule yourself? Does it need to be audited? No, you didn't. That is collecting evidence. If the client prepared the schedule, what do you have to do? Audit it. Duh. Which is better evidence? When you did yourself or when they did and you audited it? Probably when you did yourself, which is more expensive. When you did yourself, you get a little bit better evidence, but you did it yourself. It's far more efficient in the audit to have the client do the PBCs, put together a lot of the information, right? You make all the audit judgments, though, right? You do all the testing, you collect all the evidence, right? But they save you a whole bunch of time, right? You're careful so that you still get a really good audit. So maybe a little less effectiveness, but almost no reduction in effectiveness, and a huge gain in efficiency. Is that a good trade-off? Cost benefit? Yes. Okay? So we do those kinds of things all the time. So anyway, you were looking at how big these firms are. So Deloitte's the big gun now? I don't know. These are worldwide revenues, or is this just the U.S.? This might just be U.S. revenues. I don't know.
No.
Is it worldwide?
US
U.S. only. Yeah, U.S. only. Okay. So I think Pricewaterhouse is bigger worldwide. I think. But anyway, so they show how the Big Four ranks in terms of U.S. revenues and number of professionals, number of partners. So it gives you an idea. They're big firms, aren't they? Right? Obviously. How many offices they have. And then going down, when you get into the national ones, boy, they're tiny in comparison, aren't they? Yeah, they're all tiny in comparison. And you can see where Crow is. What do we have in this market? Deloitte, Pricewaterhouse, EY, KPMG, of course. Then is our next one Crow? BKD's gone up there quite a bit. Out on the West Coast, Los Angeles is big. Right? So they're kind of regionals becoming nationals, right? In case of people like Crow and BKD getting bigger and bigger. And then there are some really big locals, really large locals. I think they're both New York. I think. Okay, anyway, so it just gives you an idea. Useful to know, I guess. We talked about peer review really briefly, or mentioned it. On page 28, peer review expanded after the Madoff scandal. Madoff was unbelievable. You know what's interesting about that one, though? He was trading. Have you ever seen that movie? Madoff. Oh yeah, I watched it sometime. It's pretty good. It's pretty good depiction, and I've got a video. There's a PBS video that you can find. I've got a copy of it. It's pretty interesting. What's really sad about it is when I put on a baseball cap, I look an awful lot like him. I'm not kidding. I really do. You know, I couldn't believe it. The student pointed that out to me. Watched the video and said, and I said, well, I wish I had the money. But I guess I wouldn't want to be sitting for the rest of my life in jail. This guy's unbelievable. His son committed suicide because of what he did. And he says he always was weak. He said that to a reporter. This guy's about as evil as you can get. Anyway, he hired a one-person CPA firm to audit a multi-billion-dollar operation. Filed with the SEC. So they say here that peer review is like, I did not get the signature. I paid him well. But the whole thing was a shame. It was an interesting project. But look at this. They doubled up the numbers, right? Nearly doubled from 1,800 to 3,000 in New York that have to have a peer review. But that firm wouldn't have to because if you only had one or two practitioners, you're exempt. So his auditor wouldn't have had to been reviewed anyway. So they fixed that problem, right? Yeah. So every time we fix problems, we don't really. We're never going to have another savings and loan fiasco or another subprime loan fiasco. This isn't going to happen again, right? There's not going to be another thing like that. Well, you know, they were trying to pass some regulations to try to control it a little bit, but there's an awful lot of opposition to that, so we did some regulations, but they have no teeth. So are we vulnerable now in the stock market? Sure. These will have it at it again in 2 years. Probably already are. Right? And do people get away with fraud, by the way? It's not even fraud if everybody does it, is it? Subprime loans, most lenders were doing it. Loaning money to people who they knew were not going to pay them, a whole lot of them. And then packaging those securities, right, those loans, into portfolios, right, that were then sold as A-rated securities, right? And the A ratings came from all of the agencies that, you know, rate securities, Moody's and so on. The whole industry was in it, including us, because we were auditing those things, right? Yeah, amazing. Yeah.
Did you watch The Big Short?
I haven't seen it yet.
Good.
Same
It was
sort
all
of idea.
about that.
Yeah, same idea. Yeah, really good. Yeah. And of course they dramatize it. Everybody's not beautiful having sex all the time, you know, like, yeah, but there is a lot of money flowing through, right? Yeah. That's like the land developer I worked for when I left. He says, exactly how much money would I have to pay you for you not to have left? Because I took 1/3 of the money to go back to teaching because he was paying me. And I says, I don't know, Larry, I guess I never wanted to be rich in payments. And he looks at me and he says, who the hell wants to be famous? Yeah. So, yeah, it's the mindset, right? It's the mindset. And he wasn't too much of a thief, I don't think. Know these different forms, and it's kind of complicated. Very few people are a sole proprietorship anymore. What do they do instead? So they can limit their liability, what do? They would probably become an LLC, limited liability company, even small ones, okay? If you're a one-man show. What if you're a general partnership? Just partners, not incorporated. LLC, right? Or a limited liability partnership, depends on the state, right? Okay, general corporation, almost nobody, right? If somebody is just stockholders putting it together, they could do that. It's prohibited by law in most states anyway, right? Professional corporation, owned typically small firms. They mention in there limited liability company, mini firms, all different sizes. Okay, depends on the state whether it's a professional corporation or limited liability company usually. And then there's also a limited liability partnership. And what this one does, it's structured and taxed like a general partnership, but but it has the personal liability protection of an LLP. So in less than that of a general corporation. So it's a nice mix. Not surprisingly, all the big fours are one of those. Okay, got it. Limited liability partners, and they can go across state lines. Okay, you need to know that. You know about these different levels of, well, maybe you don't, but you do now. Staff assistants, when you start, usually it takes about 2 years to 3 years to become a senior. Senior is 2 or 3 years, up to maybe 5 years. Manager, you're going to manage for 5 to 10 years. Different firms have different levels. There could be supervisor after senior. Some firms do that, you know. And then partner is usually more than 10 years. No guarantees. This is not a 10-year decision, right? This is performance decision. Very few people make partner in less than 10 years. Some take much longer. Okay, this is the idea. Usually, if you're not progressing very fast in the firm, you will decide to leave because you get too many opportunities elsewhere, and you're feeling like you're because you're not getting up the ranks. Right? What tends to happen is you make decent money when you're a staff assistant, you just don't know you are. But compared to what you cost the firm, you're getting paid pretty well. You know, you're at a loss, basically. So they're training you so much. Oh, by the way, you write down every single minute you work on anything. So they give you a time budget that's 5 hours to do something, right? You're vouching payable stuff. 5 hours or something, and it takes you 15. What do you write down? 15. What do they bill the client? About 5. They'll eat the rest. It's okay. It's training. It's normal. Here's the thing that'll really get you. Can you experience this one? The senior did the work the year before that you are now doing. And they were a second-year person when they did the work. Now they've got 3 years experience, right? And they made senior, and they want to be a hero. So they can start moving towards manager and please everybody and all that stuff, right? So what they do is they give you a time budget that is how long it would take them to do the work. And it's your first day of work as an auditor. Guess what happens to you? They're the one who would have taken 5 hours. What does it take you? 15. And then they're pressuring you to get done faster because they wrote that time budget. And then you know what happens in a good firm? They're in big trouble. What the hell are you doing? You're supposed to be training these people. Don't do that to them. Because what do you think? Well, it's taking you 15 hours to do it. It says 5 hours, doesn't it? Here's the audit step. It says how long it's supposed to take you. Less than that. Quarter hour increments sometimes, right? But an hour here, an hour there, whatever. However many hours it's supposed to be, and it all adds up to the total on the job, right? On each area of the job and then the job. What happens to your morale when it takes you longer than the 5 hours? You think you're going to get fired, don't you? Right? Yeah. So if you have a good manager, they just ream out the senior for that. I've done it a lot. What the hell did you do? You know, you can't do it that fast. Prove it. Yeah, prove it. Yeah, so if you really audited it. So you always take the time that you really need to do it right. Because people are relying upon your work. You don't just work 5 hours to stop, right? You do it all. You do it right, and you report every minute. Because if you don't report every minute, it's going to happen to the next person down the road, right? You lie and say it took you longer. Plus, you're going to have a whole bunch of time that you were not productive. You were here 50 hours this week, and you billed 40, you billed 30. What do you mean? You have to bill it, right? You have to put it on a job, unless you're debt time or something, right? In training or something. You got the idea? But on every single minute, it's unethical not to. Don't ever put down less work, less time than you did, ever in your career. You can get fired for it easy. I've seen it happen a lot. I've fired hours for it. Get consistent. No, you're not ethical. Don't do it. Okay? You have to tell the truth about everything all the time. And then it's their problem to try to collect it. Right? Okay? And you'll get better and better and better. So anyway, the seniors are the ones making money for the firm. They're really valuable. They're getting paid a lot more than the staff assistant because they're typically working even more hours, aren't they? I mean, they're just really cranking. And their billing rate's higher, so their compensation is higher. And they're trying to get to be a manager, but they're a money maker. They still don't make enough to, you know, even cut into what their billing is. And then the managers tend to make less money, but work a lot less hours. It's weird than a heavy senior. So you get promoted and you make less money. It's weird. But what's going is what you're doing is you're going after being a partner. And now once you make manager, you got a shot. But you know what happens as soon as you make manager? Everyone wants to hire you because you made manager in a big firm, right? So you start getting all kinds of job offers too at that point. If not at the senior level, you do them too a bit, but far more at the manager level. And then during that period of time, you're working on being a partner. What's really fun is when you become a partner, they pay you really well, but you have to take most of that money, not most, a lot of it, and buy into the partnership. What's really sad when Arthur Anderson folded, all those partners, some of them still owed the firm money. They're buying out the old partners. Still litigation going on about whether or not they have to pay them and all that sort of thing. Yeah, when you buy into a partnership, you are buying in. And so they pay you a lot, and then you take a bunch of your salary and you buy into the firm. Now I don't want public accounting, do I?
I was talking about taking away billable hours. How do you think they were getting money?
What do you mean, not recording them?
Yeah.
You just don't write them.
So then when
You actually write down your hours. Oh, how would the firm do it?
Yeah.
Because you actually write your hours down. It's a budget, and then you write your hours down.
Yeah.
And whatever it is, and they, you know, and they can bill it or not. They just write the fee. They bill the hours that it should have taken instead of the hours that you worked. And then that's just a loss for them, which is normal because they're training you. You don't get trained by going to seminars. You go occasionally, right? You do a week's training a year, maybe. Not nearly enough. All the training, you're going to learn to audit doing the audits, not on the job. That senior is training you constantly. You just ask the questions, and they're doing their best to answer, you know, and they're also asking the manager questions, of course, and, you know, and so on, manager department. Makes sense? Well, by the way, everything's reviewed by the senior that you do, then everything the senior does, including the review of you, is reviewed by the manager. Everybody got the idea? Next level up. And then the partner reviews all that. Now, obviously, at a much higher level, they're not going to look at every single word that's wrote, right? But they're going to look at the review that's being done. And that's part of training then the senior and the manager and so on, right? And quality control of the firm, the way that it works. Okay, good. You know that. Yeah. We talked about Sarbanes-Oxley a little bit. That's where Public Company Accounting Board came from, right? Oversight Board came from, SEC. Oh, you ought to know what these things are. What's an S1? Securities Act of 33. It's a big deal. You can go to jail, remember, right? On initial public offerings. You will not be invited to work on initial public offerings until you have a fair amount of experience. It's a high-risk area for the firm, right? So, but it's fun, cool. Initial offering of securities. What's an 8K? Something important happened. They changed, major change in shareholder holdings, major change in officers, president of the company died. Anything major, mergers, acquisitions, that kind of thing. Okay, and they have to be reported to the SEC, so therefore they're public information, right? Okay. What's a Form 10K? Annual financial statements. What's a Form 10Q? Quarterly financial statements. Big deal. All right. Okay. What's the difference between? Take a look. Okay, over on page 36. When are we supposed to be done? I waited for a lot of time. Oh, well. Anyway, what's the difference between principles in AICPA auditing standards and Public Company Accounting Oversight Board generally accepted auditing standards? Are both of those generally accepted auditing standards? Yes, and I already told you. What do you call the ones that the AICPA ones, by the way? SAS. Business auditing standards, right? SAS. Those are the SASs. And the other ones are peekaboo standards. But what's the deal with this? When you look at these standards, the purpose of an audit, its responsibility to go into general, and it's the same kind of stuff. Adequate training, proficiency, independence, due professional care, and then performance, standards of field work. Yeah, they look an awful lot the same. Reporting and standards of reporting. So there's a lot of overlap. What is the deal here? The SASs, the ICPA ones, controlled by the profession, are for who? Non-public. Right? Non-public companies. Still stockholders, right? But non-public. Okay? What about the public ones that are traded on SEC? The peekaboo standards. That's it. Okay? What are they using as their generally accepted audit? If we go back over to page 35, at the top of that table 2-3, I have written there, no. K-N-O-W, not N-O. K-N-O-W. Why? What we do. Page 35. It's what we do, you guys. This is it. This is everything. I would memorize these. I can easily envision me giving you a test question or a quiz question where I say, please list the 10 standards, generally accepted auditing standards by category. And you would write down what? Exactly what you see there. And ands and does and others, I'll be forgetting. But keywords, what's happening? And you really want to do that. You know what? What's written there is what's in the audit report. So they know they should know what's in the audit report. And we do the reporting chapter next, right? And then, so if you know this, then you know it's there. It's also what the whole audit is to do, okay? So this is it. This is kind of like the 10 Commandments, okay? So memorize these things for now. And then they'll make common sense later as you go along, okay? So do that. And I'm going to ask you tons and tons of questions about it. If I give you multiple choice questions on these, it's going to be really easy if you haven't memorized. Okay? It's going to be easy. Okay? Same on the CPA exam, of course, right? You really got them down. Really got them down. So I know that's a pain, but good. Okay? So what do these mean? The general standards. The audit is to be performed by a person or persons having adequate technical training and proficiency as an auditor. And read the chapter, of course. I think you already have, right? You know, read the chapter. Think about it. Think about it in context. But what does that mean? Well, we know what a person is. What persons are they talking about who might have adequate technical training and proficiency as an auditor? A CPA or somebody being supervised by a CPA, right? So you guys were. They're talking about you. Did you have adequate proficiency as an auditor when you started on it? Why did they look at every single thing you did? Really careful. Supervise the hell out of you, didn't they? Yeah, they're training you, and you're not proficient as an auditor yet, and they know you're not proficient yet, so really they're doing the auditing. They won't tell you that, you're doing the auditing, right? But they're relying on your work still, and they're trusting you. And are you developing proficiency? Are you guys that went out there and did this work more proficient as an auditor than when you started? Uh-huh. Oh, big time if you spend it a busy season, right? Big time. You're suddenly becoming kind of valuable, right? And what we mean by valuable, of course, is you're competent. So technical training and proficiency. What about technical training? You're doing it right now. And then you're going to do it when you go to seminars and, when you do staff training, that sort of thing. An awful lot of proficiency comes from the experience of doing it. But you're doing training right now. And be thinking in those terms, right, guys? It is your responsibility as a professional to know what the hell you're doing. If not, you have violated your ethics, right? You can never do anything if you don't know what you're doing, except you're always doing things you don't know what we're doing. So you have to ask people questions. Make sure it's good by the time you're done. In all matters relating to the assignment of independence and mental attitude is being maintained by auditor others. Oh, I was telling you, I can't always lose my train of thought anymore. It's terrible. I was telling you that I'm not independent of my grandkids. I was not independent of my grandmothers, right? Everybody else on earth. I don't trust you guys. Professional skepticism related to you, right? Independence in mind is what I'm talking about there. What about independence in appearance? That's independence in fact. What about independence in appearance? Would I be independent of you guys? No, you're my students. Got it? So appearance matters too, because somebody observing it should think that you are independent. I could audit my kids. I know they lie. I've caught them before with little kids, right? Can't trust them. So I could maintain professional skepticism. I could audit them. I'm pretty sure I could. I really believe that. I'd have a certain amount of skepticism there if I was auditing their company. Right? I would. You too. I could audit you guys. From a fact standpoint, I'm independent, but what about appearance? Clearly not. Okay? Got the idea? So we're real careful with this. When we get into the independence, the ethics chapter, you got to really look at relationships. You are probably not independent of somebody you are married to, or cohabitating with, or best friends with, or have investments with, right? And so we have rules relating to that. What's that?
Social health insurance.
Yeah. There you go.
I did 2 days. I did like work in community for 2 days, and there was like massive list of companies you had to go check off that you were associated with.
Yeah. Yeah. What's really sad is you have to vet yourself a whole bunch of investments. What I recommend for you is mutual funds, and then you don't have to get rid of any of it. Because no individual stock is material relative to your wealth, and you're not material relative to them either. And so you get away with that. I mean, it's real insignificant, right? No involvement at all. But if you are investing directly in something, you're done, right? Or have a joint venture with yourself. So we'll talk about all that stuff. So that's what we mean, independence. Yeah.
So in terms of what is it? Appearance independence.
Yeah, it has to be. Well, you have to maintain independence and mental attitude, but you need that is in fact. But you also need appearance. We'll talk about that as we go
So
along.
does it mean that like you can't audit a company that you know, like the CEO personally?
If you're best friends, well, you can know them. You have to kind of do know them, right? But well, for instance, if there was somebody who I went golfing with every week, and I had for years, I can tell you. If there's somebody, we go along in Rotary together, and I've gone golfing with them twice a year,
Right.
I'm probably independent.
So does it mean that?
But if I have drinks with them every night, I'm not independent.
So we are classmates, can you audit?
Yeah, later.
Yeah.
You don't have any wealth now, either one of you, so then it's not so, yeah, you would be sitting here. But, yeah, well, if you become really close friends over the years, then no. But if you just know each other from being in college together and it's distant, you're fine. Right? So, yeah, we think about this stuff all the time. Right? You bet. This is one of the reasons I don't like anybody that works as an auditor. You learn just to not have friends. The reason I don't have friends is not because I'm hateful, it's because I'm a good auditor, right? That's it. Okay. All right. It does change you in a way, though. It really does. as auditor. I did this when I was young. I don't do it so much anymore. It's just not very enjoyable for people you're with. Every time I went into a restaurant, I would penalize everything they were doing wrong. Wow. No wonder in many cases. Yeah, anyway, so, yeah. Anyway, don't do that, right? You're not getting paid, don't do it. Do professional care is the exercise for parts of the audit for preparation report. What does that mean? Do professional care. In doing the audit, collecting the evidence, right, and support the opinion, and then doing the report, which is the opinion, right? Yeah. Okay, what's the deal? Do professional care. What do you think do professional care is? Dress nice? Professional?
No.
No. What do you mean by do professional care?
And you feel like you're like they're supposed to do it.
Yeah. I would do what any other professional would do, any other competent professional, any other professional with integrity. I think it means we're going to try to the way you can view this, right? I'm going to try really hard to do the best thing I can do, best work I can do, right? And everybody ought to be doing that, and we get a lot of good audits that we get. So do professional care. Yeah. Okay, so that's general standards. And one thing I mean by general standards, it's not about the work that you're actually doing out in the field. What does field work mean? This is the cool thing about auditing. What do you always do? You go to the client's offices, don't you? So you're always in a different location with different people. It's really fun. It really develops you as a professional, right? Anybody going to be a tax professional in here? Why would you do that? So you can take lunch to work? Because they always go to the same place, sit with the same people, go out to lunch with the same people. Boring. Auditors travel around. Oh, that's right, you're out of town a lot. Anyway, you travel around, meet new people, have a blast. How many like auditing? For that reason too. Yeah. Those of you doing tax are crazy people. Yeah. So see, there is a really big difference between auditors and tax people, and it's easy to set up a wall because auditors and tax people really aren't at all the same. They're all within the firm, in the same firm. You're kind of a nerd though, so that would make sense. And you'd want to sit in a closet somewhere and do tax returns. You know, it's not the same as it used to be. I like to tell Alicia that. I didn't want to do taxes, and I said, you wouldn't either if you'd have gone through when I did. And she says, why is that? And I said, because we didn't have computers. Can you imagine doing taxes? No searches online. No database online. The database was in books. I did a little bit of tax research when I first started at Anderson. I thought I was going to die. They had these books, the whole wall in a conference room. Actually, it was all four walls in the conference room. There's just a door in it. And I think it was a window too. No, there wasn't. There wasn't. It was an inside room. Anyway, there was a door. And then all the way around, ceiling to floor, were these binders, right? Books full of tissue paper. I'm not kidding. You can see through the paper. And what you do is you take a piece of paper and put it behind the page so you could read. And then when you flipped it over, you put the piece of paper on the other side so you could read. Luckily, there were copy machines by then, so when you did find what you wanted, you could go to a copy machine and copy it, and then you'd highlight the thing. And I thought, I quit. In 10 minutes, if this was really my job. You know, they made me do it while I wasn't out or not. It was horrible. Interesting, but horrible. Now you can look stuff up, right, online. You slackers. There's no tax practice anymore. It's not hell anymore. It's just normal stuff. They even fill out the tax returns for you. What do you guys do? What is that tax return processor called? The real common one?
TurboTax.
TurboTax. What do you have? TurboTax, and then you just put the information in TurboTax, and out comes the tax return, and you charge them a bunch of money. Is that tax? That's a joke. Funny. Okay. Anyway. Standards of field work, anyway. The work is to be adequately planned and assistance, if any, are to be properly supervised. Duh, right? But yeah, you need to know these. Adequately planned, right? And assistance, if any, are to be properly supervised. Imagine if I ask you a question like this. Which one of these is a standard of field work? And then I give you one of those three, and I give you three from the other two categories. Could you pick the one that's a standard of field work? I'm not kidding. I'll ask you that kind of stuff on the CPA. So a lot of them are really pretty easy. But for me, could you write them down? Okay? Obviously, if you can write them down, you're going to know which one's in which category, right? Okay. A sufficient understanding of internal controls to be obtained to plan the audit to determine the nature, timing, and extent of tests to be performed. How much is sufficient? Oh, by the way, how much is adequate? I didn't say that. I should have. What's adequate? Enough in your judgment. What's sufficient? enough in your judgment. I'm not kidding. Right? So this is a profession. We use our judgment. So how much you think is sufficient? Understanding internal controls we obtained to plan the audit, and also we're doing an internal control audit now too. So I don't know why they didn't change it a little bit for that. What's the nature, timing, and extent of the test to be performed? What's nature? What are you going to do? You're going to do confirmation. You're going to do a test of details. What are you going to do? Okay. What audit procedure would you do? Okay. Vouch something. You know what all this stuff is as we go along. Those who've been out there know what I'm talking about. Then, I'm thrilled. Okay. So they'll share as we go along. Okay. So nature. What's timing? Do a win or win. Interim date or year end. At year end is maybe better auditing for substantive tests, which means substantiating and aiding balance. Okay? For test of controls is better for across the full time span. Right? When do you do it? The timing. But you can save money by doing substantive tests at interim periods in the middle of the year, earlier in the year, at different times during the year. You can save money, but then it requires a roll forward at the end on substantive balances, right? So you could save time and money, and it's cheaper to do the auditing when it's not year-end because there's less, it's out of busy season maybe. You know, there's all kinds of rationales for this, and we'll get into that kind of stuff too. There is quite a bit here, isn't there, when we start talking about it? Okay, but anyway, there's quite a bit to get here, and not just, what I'm trying to do is not just give you, well, I think it's boring to just memorize it, right? But trying to give you a flavor for maybe what we might do out there. And those of you who've been out there, correct me, add, okay? Right? What have I screwed up so far? Everything? No, okay. Do they still call you grunts? No, they quit doing that. Now you are really nice people, you're part of the team. They didn't bother with that shit before. They just called us grunts and gave us all the work. You know, when you're a grunt, you have to do that. Okay, fine. Like being in the Marines or something. Okay, a sufficient, appropriate, evidential. I did timing. What's extent? I should do that. Extent of the test. How much? You know, how many things do you look at? I'm doing a test of controls over cash. You know, how many checks do I look at? Literally. Okay, how much? Okay. Anyway, so you're using your judgment for all that stuff. Sufficient, appropriate, evidential matters to be obtained through inspection, observation, inquiries, and confirmation. So the inspection is what? I look at it. I look at a document, right? Perhaps. Okay? Or I could inspect a truck, right? Good. Okay? Building or something. All right? Observation. I watch them doing something. I might watch them real confidently. Observation of inventory required. I'll observe them counting their inventory. Okay? I don't count it. That's doing the work. I observe them. That's audit. I'll have a good story for that when we get there. Yeah, fun stuff. Anyway, inquiries. Was that asking questions? How strong evidence do you think inquiries is compared to inspection and observation? Weak. Which is better, inspection or observation? Typically inspection, right? Getting yourself, observation, considering them do it. Okay, how about confirmation? That's an independent third-party confirmation. Confirmation with the bank for how much cash is in the bank. Maybe a confirmation with lenders and how much the debt is, what the interest rate is, and all that stuff, right? The loan agreements. Independent third party, what do you think? Pretty good evidence. Is it as good as you doing it yourself? Nope. But it's real good. Okay, it's real strong. By the way, how expensive do you think confirmations is compared to an inquiry of the client? Let's see. I asked the client a question, or I send out confirmations. You guys do any receivables confirmations with cash? How much time you spent? Oh man, it's a big deal, isn't it? Right? Expensive hunch, but it's much better evidence. Okay? So you're balancing how good the evidence is, right? Sufficiency of the evidence, quality of the evidence, sufficiency enough, quality of the evidence, right? Okay? Balance quality. All right. Appropriate evidential matter, yeah, to provide a reasonable basis for the opinion. We'll make it maybe. Standards of reporting all go together, and you know what? This is just what's in the report. The report shall state whether the financial statements are presented in accordance with generally accepted accounting principles. Yeah. So when we look at the report real soon, next time I see you, we are going to put in there, so read it carefully. You want to know those reports. You don't have to memorize them for me, but you really need to know what's in it. Okay, so get close. Okay? Get close. So they're real comfort. And again, when it was one page, it used to make people memorize it. It really was very effective. It just doesn't work anymore. It's too much. okay? So, know what's in there, really know what's in there, really critical. And that'll make lots of the questions that I got in section CPA exam are about reporting. So, know the report inside that. If you could write one, you could probably answer questions about it, right? Okay, really paid off. Oh, by the way, I just looked at you and just reminded me, several of you guys are doing this KCEE. I never remember the letters anyway, but the nonprofit. Did you guys get my 2 emails yesterday? Did you get both of them? You got both of them. Yeah, I don't know what happened. I'm changing one email into the other, so it's really weird, yeah. So, you emailed me and said, I can't do it tomorrow morning. Yeah, so did Grant Smith. He's down in Florida. He's like, what? It's tomorrow. Yeah, oh, well, sorry about that. Yeah, anyway, it's October 26th. Everybody going? You arranged to be there at 8:30 in the morning. It's going to be really cool. And this woman is involved in every nonprofit of any size whatsoever in the local area. She's really something. Really something. See, I'm not as sexist as you thought I would have. Yeah. Woman's brilliant. She knows everybody. She got the worst job on earth. She works with the Metro government. And she goes from meeting to meeting to meeting her entire life. God, she runs a good meeting. No wonder there's a lot of practice. Okay, anyway. So the report shall state whether the statements are presented in accordance with GAAP. We're going to say it in there. When you read the report, look for it. The report shall identify those circumstances with the principles that have been consistently observed in the current period in relation to the preceding period. If they say nothing about consistency in the report, what do you assume? Correctly assume they're consistent. Otherwise, you add one sentence to the audit report that says they're not, and refer to the note in the financial statement where you talk about what's not consistent. Okay? Informing disclosures in the financial statements are regarded to be reasonably adequate unless otherwise stated in the report. So that's an assumption you can make, right? So those 2 are assumptions. The first one, 2 and 3 are. The first one you're going to actually state it, okay, in the report. And the 4th one is just what's in the opinion. The report shall contain either an expression of an opinion regarding the statements taken as a whole or an assertion to the effect that one cannot be expressed. You don't issue statements without an opinion. Got it? Okay? When an overall opinion cannot be expressed, the reasons therefore should be stated. In all cases where the auditor's name is associated with the statements, the report should contain a clear-cut indication of the character of the auditor's work, if any, and the degree of responsibility the auditor is taking. Boom. So if it's a review, you tell them. If it's a compilation, you tell them. If it's an audit, you tell them, right? You never, ever put out a financial statement you have been associated with in any way without a report. Got it? Okay? I'm bored. You're bored. Go do something else. Read another chapter. I did pretty good, didn't I, you guys? I'm close. Oh, yeah, shut it off. So we don't have to go back to this talking about that. Thanks for showing up. By the way, you guys, I really think it's nice that you show up and you pay attention and pretend like I might be saying something that might be useful.